Hey, my name is Josh Rosenthal from Sealevel Insights and sealevelinsights.com. If you joined me last time, we did a foundational look at the profit and loss statement. But if you're a business owner, small business owner who's trying to keep cash in the bank, please don't assume that you understand it. Just so we can have this conversation together, will you go back and watch it, just so we're sharing a common language? Because ultimately what we're going to do is we're going to learn about these three core financial statements, but so that we can keep cash in the bank. So this is a foundation building thing. So even if you know profit and loss really well, go ahead and go watch it. Now we're going to talk about the balance sheet. Again, if you think you know it, hang with me. Let's develop the common language so that we can ultimately do the fun stuff, which is keep cash in the bank so you can grow, keep cash in the bank so you can meet payroll, keep cash in the bank so you can take an occasional vacation as a business owner. So here we go. Balance sheet, shorthand for the balance sheet. We're going to just put BS. So here we go. It's a fundamental equation. Assets equals liabilities plus equity. Most people know that. If you don't know that, that's what really our entire bookkeeping world, our entire accounting world is pretty much built around. And all this is saying is assets, that's everything that you have. Everything that you have comes from debt or from cash. So if you have a piece of equipment, either you funded that from profit, you funded that from your own personal savings, or you took a loan for it. And what the balance sheet is trying to do is to show all of that stuff. But what is probably not understood normally with a balance sheet is that you can show, I could look at your balance sheet and really get to know you as a person. If you're running your business, I can look at your balance sheet and understand who you are. I can understand what sort of risk profile you're comfortable with. I can understand how you choose to run things. I can actually, to some degree, understand if you're really competent at what you're doing or if you're a little bit scared and you're not exactly sure what to do. Because the balance sheet tells us if you're holding, how much cash you're holding. Sometimes you hold too much cash, sometimes you hold not enough, and I would say both of those are equally as irresponsible. So let's take a quick look. So if we've got assets, assets can be a handful of things. Cash and cash equivalents, which really, let's just say the money that you have in the bank, the money that you have in savings, that's obviously an asset. The next thing is that you have are more things that are called current assets. These are things like accounts receivable when people owe you money. Typically, all of your current stuff is things that you're going to convert into cash. If it's not already cash, you're going to convert it into cash in the next 30 days or so, maybe longer. Depends on your business, depends on the terms that you have with your clients. Then you go in the realm of fixed assets. These are the things that you buy, in my world of coffee roasting or in opening retail shops. This is the furniture, this is the coffee roaster. You place a value on that. And there are just more assets. There are more things that you have. So if you have all these things, how did you get them? You either got them from liability, from debt, or you got them from equity, which would be like your own personal cash. So certain liabilities that we look at are your current liabilities. These are things that you have that you're having to carry, like a credit card that you pay off hopefully monthly, but sometimes things go wrong and you can't pay it off monthly, and maybe you carry a balance for years. I've done that before. Other things that are in your current liability would be your accounts payable. These are people that you owe money to that hopefully you're going to pay in the next 30 days. Depends on your terms, depends on your industry. So these are the things that you have debt on. So you took out a loan, your long-term liabilities, when you took out a loan on that big piece of equipment that you wanted, it's an SBA loan, it's 10 years, that lives on your liabilities portion. And then your equity is cash. So if your business is building cash, it gets thrown into the equity pile. If you're having to throw cash into your business to keep it solvent, that goes into the equity pile. And so when I say I can understand who you are as a person, as a business owner, just by looking at your sheet, your balance sheet, that's when I'm comparing your current liabilities to your current assets. That's called the current ratio. There's another important ratio called the acid test ratio. And it's really the spirit of the business can be read on the balance sheet, at least of a small business. So next time we're going to talk about the statement of cash flow, which is really where we start to dig into how you keep money in the bank, where it comes from, where it goes, all that sort of stuff. My name is Josh Rosenthal, Sealevel Insights, sealevelinsights.com. We'll see you next time.